You have probably seen the ads for reverse mortgages, maybe even right here on CNBC. You get cash, you keep your house, but these products are not for everyone. Now that new rules regulating them are in effect, is a reverse mortgage right for you? Our senior personal finance correspondent Sharon Epperson joins us now. These are controversial products.
They are very controversial.
New regulations, according to some, have made them more desirable.
Exactly, Tyler. And we're talking about these new rules that have made it tougher to get a reverse mortgage, actually. But still, the commercials that are selling retirees on their benefits continue, including this one featuring Tom Selleck. Before taking out one of these loans, though, you need to understand how they work. So we're going to start with the basics. To qualify, you need to be 62 or older, use the home as a primary residence, and have paid off some or most of your original mortgage. Now, once approved, you can take the money in a lump sum, a monthly payment, or as a line of credit. And you don't have to make payments while living in the house. It sounds like a great deal, right? Well, you also have to consider the fact that you're still on the hook for maintaining the home and for paying taxes and insurance. And also, unlike a traditional mortgage that gets smaller over time as you make those payments, a reverse mortgage actually gets bigger, and here's why. First, you get the money from the bank. Then you live in the house making no payments while interest is tacked on every month, increasing the loan balance. And finally, once you decide to sell the home or you pass away, the reverse mortgage must be paid off, including principal and interest. Now, unless you have a pile of money to do that, you'll have to use the proceeds from selling your house, and that means that your estate only gets what's left over, which could be very little. And Tyler, we have a lot more of this on CNBC.com/retirewell. Brian.
What kind of a retiree, Sharon, would be a good candidate for a reverse mortgage?
Well, you have to keep in mind a couple of things. One, you have to, ideally, you've paid off your mortgage already, but you still need some income. You love living in your home, you plan to stay in your home, and you're healthy enough to stay in that home. Those are some of the people that may want to consider this.
One of the problems in the past was the idea that one party in a married couple would take out this loan. That party dies, and then the loan was due.
Right.
And so the remaining party had to sell the house to pay off the loan.
Exactly.
Have they cleared that up?
Well, so here's the issue that a lot of folks want to look at. And one of the tougher regulations is looking at the fact that you have the capacity and the willingness to pay if you have to. So they're going to make sure that you have a little more funds available. You never want to use this to pay all of your expenses. And that's why a lot of the financial advisors we talk to say...
Do you need an advisor before you jump into this?
Well, I think you really need to talk to someone. You need to talk to a federally approved housing counselor who can talk about reverse mortgages, a financial advisor who knows about reverse mortgages, but you want to look at all sides of the coin and think about getting a line of credit instead of taking that lump sum so they can just use it as you need.